Hello everyone, welcome to the channel. Yesterday we had few discussions if the market opens flat or if market opens gap down. All these discussions we made. But tell me, we discussed that if market reacts from this demand, then we are entering call. That is what our discussion was. Like I clearly told, if market opens gap down and if it comes down like this and gives a positive reaction from this demand, then I'm interested to take the market higher. This is what we discussed in yesterday's reaction video or prediction video. I also told if market opens flat and comes down the moment it crosses this swing point of 23,300, then we can expect a downward move. But market opened gap down. As per our analysis, market opened gap down because of the global news related data, right? Market pushed up. If I show you 5 minutes time frame, so whenever market opens gap down of more than 100 points, 100 points plus, if it opens, you should have set of criterias, right? So first and foremost, what you should do is you should understand the structure. What does the structure say? Market is trying to push up and created a new higher high, right? This is a low, this is a high, which market created at 9:30. It pushed down for a particular demand and then pushed up, creating a new higher high. So our thought process in this particular scenario should be, even though market is trying to push up, I am not interested in this trade because our overall view of the market is negative, and we are interested to take the trade only when the market gives a negative reaction. That is how your thought process should be. It is totally fine if you are not trading in a particular day when your setup does not align. We don't know where the point from where the market can reverse from. So if you see this point, if I draw you a swing point line like this was the earlier support point from where the market bounced up and gave a positive reaction. When market came back to this particular point today, it reversed from there because this is where sellers aggressively entered today, leaving us a footprint. Okay, what do I mean by footprint? Yesterday's video I clearly explained the concepts of footprint. Footprint is nothing but whenever big institutions or big traders come into play, they always leave something like this, meaning this is a supply zone for us. This cannot be immediately treated as a supply unless or until the low is being broken. The low of the last swing point in this 30 minutes time frame is this particular point. This has to be broken by the market. So tomorrow what we can expect is market can come down, sweep this, goes up till here and gives a negative reaction like this and draw down to this particular demand which we have marked. It's going to be a volatile day tomorrow. Tomorrow is an expiry. Okay, if you capture even one move tomorrow, one single move like this liquidity sweep and this drive up also, if you capture, it's well and good, you can close your trade. See, most people, what they do is the problem which most retail traders do. I'll tell you what they will do. Okay, they will not think like, okay, yesterday we discussed all this, we have to get into some kind of a trade. So what they will do is they will buy a call option here. Okay, it will be somewhere close to 40 rupees and they will sell it here somewhere close to 50 rupees. Then this pullback, it will be again 45 rupees and then they will sell it again at 55 rupees. They will think like, oh, it's very easy, let me buy it again when the dip comes. Okay, the dip came, it is around 45 rupees again, I will sell it again at 60 rupees. Now a dip comes again, they will fall in love with this particular call option. Okay, a dip will come again and they will think like, okay, again it has come down to 45 rupees, I will buy. There will not be any higher movement. Okay, they will come down to 35, they will average. This small move will happen only with respect to decay, where their buying price will not have met also, they will start to wait, and this big downward movement would have wiped their entire profits what they have made in the morning. Understand, market is more like a business, don't treat it like a gambling. When you are running a particular shop, be it a medical shop or even a small tea shop, if you are running a small tea shop, you will have set of rules for the tea shop. You will say like, okay, I'm going to start this tea shop at around 5 o'clock or 6 o'clock in the morning. I will run this tea shop till 10 o'clock. I will take a break. In the evening, again, I will start this tea shop around 5 o'clock or 6 o'clock or 4 o'clock, whatever the time frame is. I will run this for another 4 5 hours till the time customers are coming. Around 9 o'clock, you will close the shop, you will go home, right? This is a normal way in which you are running a shop. This applies to almost all kind of shops. Even if a small vegetable shop you are running, the same to same criteria happens. You will always close your shop when your day is over, or when your products are over, or when there are no customers. There is no point in sitting in a shop where there are no customers, right? Same to same applies to trading also. Trading is a business, okay, where risk management is very very critical. If you have captured one single move of 100 points or 150 points or 200 points or even 50 points, even 50 to 75 points, if you are captured in the chart, I'm saying, not in the contract, in the chart, if you have captured even 50 points, it is more than enough. That is a mindset you should have. Okay, please understand, risk management is very very important. Discipline is way more important. Okay, so tomorrow, ideal case, tomorrow is an expiry. Okay, please make sure that you are trading in the next expiry, because VIX is little bit averaging around 15 to 17, meaning VIX is low. According to me, VIX is low, which means at the money prices are little juicy for you, meaning they will be coming at 30 rupees, 40 rupees, 50 rupees. It'll be very attractive. You will think like, I have 50,000 capital, let me put in 1,000 quantities and I will capture double the profit. I will make 1 lakh today, I will make 50k profit today. Don't have that kind of a mindset. If your trading setup happens, then you are trading. If your trading setup does not happen, you are not trading. Okay, so we have a gap here, we have a supply also sitting here. Okay, so there are two things which are to be noticed. Tomorrow, if market opens little bit gap down, sorry, gap up, and if we get a negative reaction like this and a liquidity sweep also happens in this particular supply, well and good, we can target the market to a downward range of 23,000. 23,000 being a psychological number, market can react to the psychological number in a very very vigorous way, meaning you will go mad. It will suddenly give a big fall of 50 points and suddenly give a big upward movement of 150 points. You will, if you are sitting in the wrong side of a trade, you will not even know what has happened, and suddenly it will start again to fall also. It can happen tomorrow. I'm not saying it will definitely happen, it might happen. See, we cannot predict each and every move in the market. What we can do is, when our setup aligns, we need to say to ourselves, okay, this is the supply I've marked. When market comes back to the supply and give a small 1 minute negative reaction for me in this particular supply, then I can have a defined stop loss. 23 269 is my stop loss, 23 210 is my entry point, meaning 50 points I have given as a SL here, and I am targeting 23,000 as my target. Almost close to 300 points I'm targeting. 1 is to 6 trade I'm targeting here. That is a mindset you should have. If 60 points is your SL, your lot sizes should automatically reduce to 1 or 2 lots. If you are trading in the current expiry tomorrow, I am repeating this, please trade with 1 or 2 lots. If you wanted to trade with aggressively in more lots, try trading in the next expiry. The reason why I'm saying try trading the next expiry is, even though if you're in the wrong side of the trade, meaning if you are entering a put option, once the market comes here and market does not give a negative reaction, but you have already entered put here and market breaks this and goes, you will not have a very big loss compared to what loss you will have when it comes to trading in the current expiry. Okay, keeping the video a little bit shorter, so our primary goal is to take the market down. So if market opens gap up here, we are interested to see if we get a negative reaction and take the market down. That is scenario number one. If this supply breaks, then we can see a small movement till yesterday's closing, meaning Friday session closing, we can see a drive in the market. If market opens flat or opens gap down and gives a positive reaction from this particular demand like this, then I'm interested to take the market higher. These are the three scenarios which I am interested. I hope this video is educative. This is not a video for helping you to buy a particular contract at this particular price or sell a particular contract at this particular price. It is only an educated video. Thank you so much for watching. We'll meet in the next education video.